best question that you could ask as a real estate agent or that you could ask as a home buyer. So there's 4 factors that go into your loan approval, period. There are no others, no matter what bank or what lender says. So there's 4 factors. The first one is credit. Okay, that's the barrier of entry. So what we do with every single one of our clients is we're gonna evaluate credit up front. I don't even care if you have a 760 credit score, an A+ credit score, I'm still gonna evaluate it. I wanna look at that. I wanna make sure that there are some things, advice that I can give you so that you can maintain that credit score from an identity theft protection standpoint. Or, you know, I see this all the time with first-time home buyers. They have great credit, but it's almost by luck. They don't have a lot of credit, so they've been okay. So there are some things there, some advice that I'll give you there. On the flip side of it, if you've missed the mark in regards to credit, listen, I've read thousands of credit reports. So there's a lot of things that I pretty much, I don't want to say I've seen it all, but I've seen a lot. And so there's a lot of advice that I can give clients that might have missed the mark, where I can help them maybe improve their credit score so that they get a better interest rate. So credit's the first thing we look at. The second is cash. Okay. So cash is in regards to paying for your down payment or your closing costs. There are programs out there where the state of Washington has some down payment assistance programs. If you qualify, if you make less than approximately $94,000 a year household income, you can qualify for some assistance. But for the most part, cash refers to your down payment plus your closing costs. Okay. It's a big part of our meeting because then we talk about strategy around that, whether we ask the seller to pay for some of the closing costs or all the closing costs. Or, you know, a big myth out there right now, Zach, is that you have to have 20% down to purchase a home.
Yeah, definitely.
And you don't. And another myth is you have to have 20% down to avoid paying private mortgage insurance. And there are ways around that. So, so you've got credit, you've got cash. The third factor is income. So that's where, by looking at that up front and evaluating your employment and your income, and that's a key role, because here's the thing, where a lot of the big banks and credit unions go wrong, they have you fill out an online form, and whatever you type in as a home buyer, I make $8,500 a month, boom, okay, we pull your credit, boom, okay, you're pre-approved for $600,000. But what they don't realize is out of that $8,500 a month income, $2,500 of it is commissions. And you've only been receiving commissions for a year and a half, you can't use that income. Therefore, once you go into underwriting, the underwriter says, no, you don't make $8,500, you actually make $6,500, and now you don't qualify for that particular home that you showed them and that you wrote the offer on. So we do all of that up front. So credit, cash, income, and the last factor is property. So we spend some time talking about property, condo, townhome, single family home. Is the home located in a flood zone? So there's a lot of things that you need to know as a home buyer that is relative to the property that you choose. So those are the 4 factors.